For the next conversation, the democratization of private markets, please welcome moderator Moira Forbes, president and publisher, ForbesWomen, and EVP, Forbes, and panelists Valentine Andrews, global head of private markets, Manulife Investments Management, Suyi Kim, global head of private equity, CPP Investments, and Bruce Lee, founder and CEO, Keebeck Wealth Management.
I feel like my brain has gotten bigger in just a matter of a few short hours, and it's going to continue to do so with my panels. My panel right now, I'm so excited because this morning we've been talking about the transformative forces reshaping the landscape across the industry. And what I love is while there's definitely headwinds and some dark clouds and concerns, there's lots of opportunity as well. And today we're going to talk about the democratization of private markets. What are the forces at hand? Where are we in this process? And what does it mean for the different stakeholders, really as we're in the nascent stages of this? And I love this conversation because we have leaders across a number of different areas of the ecosystem. So thank you so much for joining us today. And I'm going to start with you. I'll reach over a little bit. Manulife Investment Manager, you're a leading global asset manager. You have a really diverse private markets platform. You're focused on investments through a sustainability lens, positive impact and the like, but you have also extraordinary exposure and depth in a number of different areas. To level set this conversation, I would love to have you share your perspectives on how the private market has evolved before we go into maybe some of the trends as to where the specific areas of investment opportunity are. But what are these mega trends? And from your vantage point, how do you see where we are today?
Yeah, great, and thank you, and it's great to be here. I think the last time I was in this room, I was at an Australian-American ball, so it's great to be here and to see everyone. Thank you to Forbes for hosting. So I've been around for a while now, and the beauty of that is that you do see how much things have changed. And so, the big thematics in the world of privates are, a huge diversification. Things have really broadened out. You mentioned, infrastructure, we're the leaders in natural capital. But if I went back in time 10 years, most people were just talking about private equity. That was really the big game that was in town. Everything was private equity funds. And, even the big private equity firms weren't very diversified. And so, you fast forward to today and you think about all of the opportunities in the private markets. I always like to quote the statistic that there are way less companies in the public markets. So 30 years ago, there were 8,000 US public companies. Today, there's only 4,000. So if you want to get access to where alpha is being driven, you want to get access to the mega trends that we're going to talk about, you have to participate in the private markets, right? It's essential to get access to these private markets. So the other big trend we're seeing is the democratization, which is obviously the panel discussion. Beforehand, it was just institutional investors who would be able to invest. I could invest because I worked in private markets, but if you were the average person on the street, you couldn't get access to all of these sorts of deals. So that's another huge trend. So expansion of asset classes, democratization, and you mentioned more of the mega trends. I think you're going to hear a lot about this today, if you haven't already, decarbonization of the world. Right? We need to urgently decarbonize everything. And it's not just the energy world, and energy is actually easy to decarbonize, right? Because you put up renewables and that solves that. But what about decarbonizing buildings, decarbonizing agriculture, decarbonizing, meat? Cows are the worst thing on earth for the environment. So all of these different decarbonization trends, and then you add on AI, you add on digitalization, you add on how we're living, we work, we do everything on our phones, we shop on our phones. So just these huge mega trends are going to continue to provide just private market opportunities, right? Because it's very hard if you're a listed company to invest in these early stage decarbonization measures. So I would say much more versatility, much more broad access, less public companies, and then also investing against these huge mega trends. And that's what's happened. So things are changing fast. I mean, 10 years ago, we weren't talking about decarbonization at a conference like this. Right? If someone said that, people would say, oh, they're greeny people, right? That's just 10 years. So imagine where we're going to be in another 10 years.
And I would imagine that pace of change is going to only accelerate. Suyi, Canada Pension Plan is one of the world's largest pension plans, over $600 billion Canadian dollars in assets under management. Huge scale, huge insight into this space. We were talking earlier about the private equity landscape, and Anne mentioned just the sheer volume of private companies right now, lack of activity, a lot of dry powder and the like. How are you seeing this from your vantage point? How are you looking at private equity, and where are the opportunities that may emerge for you all on the institutional side as the retail sector starts to open up?
Okay. Thanks, Moira. I'm really honored to be here. Thanks for inviting me for this session. I would agree with everything that Anne said. Lots of big trends that private investors can take advantage of. As Moira said, we have one of the largest private equity pool in the world. I manage currently about 110 billion US dollars of investments on the ground, and that actually represents more than 4,000 underlying portfolio companies. So I get to see big trends on what is happening in private equity markets as well. I would say that what I have seen in the last 10 years or plus is that this market has grown tremendously. So if you look at one segment of the private equity investments, buyout, which is one of the most active and high-performing segment, it used to be $1 trillion market. Now it's more than $3 trillion. So that's one big trend that's growing really fast. But we all know that after the fast rate adjustment that we saw in 2022 and 23, private equity market is going through some adjustments. I would say that that is more like multiple adjustments that you need to see. It is natural because LBO model is run by your terminal value and multiple of EBITDA or multiple revenue that you're willing to pay for this. So we have seen for the last 2 years some adjustments. I am seeing now the activity is picking up after some of those adjustments and lots of values of the private equity companies growing into the dollar sign with the fast growth that we're seeing for the underlying portfolio companies. One other trend, which is a topic of today's discussion, democratization of private markets. Yes, the retail investors coming into the private investments as well as private equity market is another big trend. When you step back and look at it, that's really natural. There are two big trends that you're seeing that enables those. One, I would say that lack of DPI. DPI is the cash distribution coming back. So one of the stats that I saw is that if you have invested $1 20 years ago in buyout, you would have received in DPI of cash back less than $1 after 20 years. You reinvest it constantly. It would generate good returns, but you haven't actually seen your cash money coming back. Venture and growth is even worse. You have gotten maybe, if you put $1, you have gotten 70 cents back as a cash back. So institutional investors need the DPI, money coming back, to be able to reinvest. So where do you get the capital? It's natural that you look at the retail markets. So that's one big enabler. Second one is the technology. In the past, if you have a small ticket size, to get into any private equity funds, you had to be $10 million at a minimum. Otherwise, you wouldn't take it. Otherwise, your fund will have too many investors. It will be too much burden, administrative burden for you to deal with. But with the technology that we have now, it is possible to have wider net and then many more investors. I think that is making this possible. What does that mean for the institutional investors? We need to think about what our strategy is. Yeah? With more supply of capital, it is natural that the return can get pressured, valuation could go up. Having said all those, I do have very firm, this is last point, very firm view that private equity has inherent advantage in a sense that it has the governance arbitrage. What do I mean by that is private equity has a very strong and motivated owners. They're really motivated to make 2.5 to 3 times money in 5 to 6 years, and then they will find a way to make that work.
Appreciate those thoughts of understanding it from that vantage point, the retail investor. Bruce, from you work with very high net worth families, and this is obviously a conversation, as you know, that's at the forefront of many of the individuals in this space. What's unique about high net worth individuals and families is they may have that multi-generational approach that allows them for maybe have a time horizon that's a little bit different from the retail investor and the like. When you're having these conversations and when you're looking at the opportunities for the high net worth individuals, where are they leaning into most, and what are the risks and the types of dynamics of this opportunity that they may not fully understand or appreciate yet?
Well, first of all, that's a terrific question that really is difficult to just explain in a sentence. However, that being said, when you talk about generational wealth being transferred, so let's just go top down, and you think in terms of some $100 trillion that's going to be transferred over the course of the next few years, that tailwind is so dramatic that you have to kind of take a look at the attributes of what that all means. And so when you have a patriarch of a family, they've built their wealth from 30, 40, 50 years ago, they're going to have a completely different view on what they view as private markets. And so they might go into the standard buckets of leverage buyout, structured credit, whatever those case may be. But then when you're talking about the second generation that is about to inherit these dollars, and then so if you think about this bottom-up statistic, that in fact more millionaires are going to be inheriting money than actually millionaires creating opportunities, that creates for very crowded spaces. So the dynamic that intertwines with both those parties, and candidly, the younger generation, a little more aspirational, a little more risk taker, but possibly, as the old man would say, so to speak, hey, we got to have outcomes that drive results, KPIs, whatever the case may be. Whereas if you take a look at the genuine disruption, the younger generation says, I have an idea, and they're going to go for it. So it's between those two dynamics where you have to create, the discipline in order to create those outcomes, but you need to also have the idea. And that, to me, is where that dynamic tension exists. And so that's why you're seeing not only democratization of private equity. I personally think that although I believe these verticals, from everything that we've been speaking about here in the panel, are going to continue to grow, it's the attribute of who's also going to be an investor, which then is kind of what I think is the most undervalued space is women. And women are going to basically take over, that particular, well, okay, I'm here with.
We are right now, Bruce.
I have two daughters as well, so I'm literally surrounded by all women. But I find that they're different types of investors. And so as opposed to just talking about the democratization of private equity, it's the style in which that disruption is going to occur. Then you put on top of it AI, digitization, and these technology platforms. What I've been noticing, and I've said this before, back in the 80s and 90s when I was first an investor, you would just drop money into a large bucket and you drill deeply. Today, I view it as financial fracking. You have to go over a wider base, a longer path, shorter, more capillary type outcomes, not to suggest that if you're up the vertebra of investments, that you're not going to buy these larger funds because it's necessary in any important diet. But then when you start taking a look at the demographic and the disruption of that, you're talking about a market that could potentially possess a $10 trillion to $20 trillion market opportunity over the next 10 years, 20 years. That's going to be predominantly, in my opinion, controlled by women.
And a market opportunity where still wealth exists right now, but isn't necessarily, there's a huge investment gap as it relates to women's participation
Gigantic.
in these opportunities. And you bring up a good point in terms of these larger macro forces, including who's investing and what their priority is. Anne, you talked about the importance of sustainability and this focus in terms of really the positive outcomes for the world in terms of the core pillars that you all are invested behind and the like. Can you talk about where you see those opportunities exist? You talked about, timber, infrastructure, real estate. There's sometimes some misperceptions as to where opportunities exist within those sectors and where you see the greatest growth and dynamism that the market may not appreciate right now.
Yeah, no, and again, at Manulife, we have a very broad platform, over 100 billion across all of those sectors, credit, PE, real estate, infrastructure, and timber and ag. We are the biggest leader, we are the #1 leader of natural capital, which which is taking care of our Mother Nature, so to speak. So trees are the original carbon sequestration tools. So it's important to think about that, and I don't think enough gets talked about in relation to that. But taking a big step back, I think the world has become much more complicated given the rate increases, given the DPI stats you talked about, right? It used to be back in the day, private equity was very clear, it was much higher returning, infrastructure, real estate, lower returning, and credit was down here. Now with the mega trends, decarbonization, digitalization, demographic, all of the things we're seeing, and also just this change of interest rates, things are becoming a little bit more harder to discern. So I like to think, and given private markets is growing, so much, I like to think that we're becoming more attuned to sort of thematic investments, right? Because as private investors, we can't trade in and out of a deal very quickly, right? We have to put money in the ground today, and then, someone's going to buy that in 10, 15, 20 years. So, I wish I had a crystal ball that's going to project everything, but I don't. And frankly, I'm always interested that everyone thinks very, very close term, right? Like, oh, rates have gone down, rates have gone up. But the best thing is to be very diversified and get access to a lot of different asset classes, because I don't care who you are, no one exactly knows what's going to happen in the future apart from investing against these very large trends. Bruce, you just mentioned one. Women are going to become more in charge of capital, but also we know that the world needs to decarbonize. We know the world's growing in Asia and emerging markets more than it's growing here. We know people are getting older. We know people are living less well when they're old. I mean, all of these big trends, that's how I think about putting money against it. So we talk about decarbonization. Investing into renewables, investing into storage. We invested into a company that builds battery storage in urban areas here in New York. Why? Because the wind doesn't blow and the sun doesn't shine always when you want it, right? And the grid is unstable at best. So we then need to have storage so that we can all turn our power on days like today and not worry about brownouts. So all of these really important trends that are out there that we all know about, as a private markets investor, we're putting money behind. The same with natural capital, right? We want to invest into sustainable forestry. We want to invest into sustainable agriculture to be able to make sure our children and their children are going to be able to live in this world and make money at the same time. I think that's the important point, right? None of this is charitable. So to me, that's the important thing, like putting money where we can make a big difference, but where we can also create value for our investors. And that is the big trend, right? These thematics that we're now investing against, and that's not green. That's just good business. And we believe that sustainability is good business.
And those thematics, I think what I appreciate what you all do is that you create the products and the opportunities for access for retail investors and the like to be able to start to have entry points in these areas that are really important. So it's these themes that we're investing against. It's whose money is being invested on both sides, both in terms of wealth creation for women, but also in terms of women at the helm of these really significant institutions deploying capital, such as yours, Suyi. We were talking earlier, when you look at your purview, you're not moving a ship, you're moving a freight cargo. I can't even describe just the size of the type of institution and opportunities that you're shifting and the scale that you have. I would imagine that there's a lot of opportunities to sort of make big bets, but as an aggregate, it may not move the ship necessarily. That being said, what are your perspectives as you're sitting in your chair right now that you think will have the strongest, or likely have the strongest performance in the next 12 to 36 months that is shifting your perspective than maybe if we had this conversation 5 years ago?
You can say that I'm biased, but I'm biased for private equity. Again, I have huge faith in private equity asset class. And it provides, I would say, just distill down to two things. One is it provides a diversification and access to the part of the economy that you cannot access through the public markets. I talked about how many companies we have as an underlying portfolio companies. It's a huge part that unless you invest into private and private equity, you won't get that equity access. Second thing, private equity, provides is a long-term outperformance versus public markets. Despite the size that we have, $110 billion, we have for the last 10 years generated more than 16% net returns. That's net of all the operating costs, net of all the allocated costs, everything. So it hands down beat the public market returns. So this is an asset class we continue to firmly believe that it will outperform. There are multiple strategies within private equity that I think at any given point that will do better than other type of strategies. Under me, there are all type of private equity strategies, whether it's a buyout, whether it's growth equity investments, whether it is Asia markets or the European markets or US markets, whether it's a secondaries including LP secondaries or GP-led transactions, fund investments, all of that. I have all of those strategies. For example, for the last 2 years and including this year as well, the secondaries business has been very active and it provides very attractive risk-adjusted returns. And secondaries business is a strategy that provides liquidity to the private equity industry. So given what I said earlier, that's natural. So I think that opportunity will continue to last. And I think the opportunity to buy very attractive businesses and then compound your returns for the private equity owners continue to be there.
No, it's helpful to see where those openings and new windows are emerging. Bruce, as we wrap up, again, you work with family offices, high net worth individuals and the like. I would love to get your perspective on what this means for portfolio allocation of the future, the traditional ratios that family offices have approached, and where you see them placing the biggest bets in terms of the types and breadth of opportunities that now exist in this space.
I think the standard 60-40 model is something that's been so ground down over the last 30 to 40 years. You don't really even need an advisor for that. There's plenty of surrogates out there that you can pay literally no fees and accomplish those goals. So I think from the perspective of where advisors are going with their clients, as the panel has been speaking about, alternative investments are becoming a much, much greater discussion. But I think it's being camouflaged by talking about how these alternatives are equity-like or fixed income-like. And so there are some correlative aspects to it. And I think the most challenging thing, and I'll just kind of wrap this up from my theory, is, you know, the Federal Reserve was primarily subsidizing a lot of the risk for over the last 20 years. And today, with an inverted yield curve, what we're seeing is a look and a view that makes most people feel uncomfortable. I think everybody is waiting for that next shoe to drop. I don't know when it's going to happen, and no one wants to be left holding the bag. So when you have an inverted yield curve, a Federal Reserve who really, really wants to lower rates but can't because the US is so strong in its economy, the key is alternatives the best place to be, which I agree with the panel it is, it's when. And so the discussion then revolves around what do we do to take less risk over a longer period of time, and how do we monetize that risk for the next 5 to 10, 20 years? Because everybody knows if you invest pre-08, the GFC, versus post-08, those outcomes are vastly different. And so I think that is where we're at this moment in time, and I think that's where I think the conversations are revolving.
So a new framework for approaching this. Well, thank you all for your insights and the optimism in terms of where the opportunities exist and what's ahead. Thank you.
Thank you.
Thank you. Thank you.